Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Attila Pinky, and in today's video, I'm going to talk about that in the United States, maybe negative interest rate can come a bit later in this year, maybe in December. So let's talk about that. The second news is that the Bitcoin dominance cycle suggests the 2017 crypto rally maybe could repeat itself. And the third thing, let's talk about Cardano, because Cardano behaves bullish right now. So guys, all this in today's video. And if you haven't subscribed to this YouTube channel, but you would like to get the daily fresh cryptocurrency and blockchain news, then here we go. Hit the subscribe button, bell button, all, and then you're getting the notifications as soon as a new video is out. Check out the links under this video, useful ones. You can save money with it. And also I have a free course for you, how to start to invest in Bitcoin and other cryptocurrencies. And now it's time to move on to the market and check that one out. So here we go. Bitcoin, we can see at $35,846 US, which is roughly speaking 0.5% decrease in the last 24 hours, and it's jumping a bit higher right now. Ethereum 2,452, also around a bit less than 1% down in the last 24 hours. When we're looking at the gainers, we see the graph going up 11%, Decred 10% up, Leo 9% up, so not big moves at all. When we're looking at the losers, we see Bakery token 10% down, MDX 8% down, Horizon 7% down. So yes, well, we have some crypto going up, some going down, not big moves. Bitcoin is still going sideways, and then let's talk about that a little bit. So here we go. One very important thing which makes us bearish is that we stay under this line, what you can see here, since here, and basically this is the 200-day moving average, and this is definitely a bearish sign when we use this line, the 200-day moving average line, as a resistance level. As you can see here, look, Bitcoin has tried it here to go above it, also here to stay above it, but no, we couldn't make it, and then we're just going here down. When you're looking at the chart and look back in the bear market, you can see that the bear market, this 200-day moving average line is a resistance. I can actually quickly show you. Let's go here, and let's go back here to 2010, 17. Yes, here we go. And look, here we're in the bear market, and you can see this line. So it break it through, then it went above it, but that was just too weak, lower high, and then going under it. And here, look, all the way, always, until here, it couldn't cross it. And when it crossed it, then actually started to go up. So actually, this is the important thing here, that yes, when we are in the bull market, then we should, as you can see here, always just jump back, just touch it and go up, go up, go up. That's how it goes. When we are in the bear market, it works other way around. So we just reach it, and then there's another pullback. So this would be crucial to actually make a move, and let's go above it and stay above it. Another one is, look, here we can see again this triangle shape, and here in a couple of days, in 1, 2, 3 days, I think at least, I don't know when exactly, this should, break out. And when we break out here in the to the upside, then we might can, retest this kind of 40,000 level, which is here about. But when we break it in this direction, so downwards, then the crucial thing is, do we reach here again 30,000 and then cross it? Because if it does happen, then it can easily go down to 25, 26, something like that, very, very quickly. And there is actually a bigger support around between 17 and 19,000 around here. So it actually can happen that it looks under 20,000, but we should see which way this is going, and then first touching the 30,000. And if it breaks it, then we will definitely see a move, I think, very quickly down to 25,000, and even then it can go lower. But it can go upwards as well. So now, right now, we're having this kind of bearish signs, but it doesn't mean this is for long term. It can be just for a short period of time. But we should always check the scenarios, what kind of possibilities we have and why, because this is the only thing you can do. You can do some predictions, but nobody has the crystal ball to say that what will be for sure. The only thing you can do, that you thinking about your strategy, you make sure you stay in profit. So if things going up, as I told you during this heavy bull market period, you take profit. Taking profit, it's a crucial thing. You cannot do it. Otherwise, it's no point to do this whole game here, invest in it as it is. And then you take profit. And then, of course, now you might take one part of it in some stable coins to get ready to jump in. And also, you might have some things in it. But when you're thinking a long term, when you have something in crypto, okay, it will come back definitely sooner or later, but we don't know right now how the trend will behave in the short term. Okay, and now let's move on to the first news. And this one is going to be about that maybe negative interest rates can come to the US, maybe even this year. What we can see now is this heavy money printing still going on for a while. And this is the way how they would like to handle this kind of corona situation, this kind of pandemic, which caused big trouble in our economy worldwide, by the way. And now in this article, you can see that Fed Reserve repo volume sparks worries US short-term rates could go below zero. And this is something what we have to think about. Why to keep your money in cash is not the best investment. It never was, to be honest with you. So this is another reason why people might think about to look for some opportunities where they can keep the money, at least keep the value, or increase. And now that we have this inflation, and the inflation rate, and as the number came out not long ago, that they showed that we're doing worse than they pretended. And yes, now we actually having maybe negative rates here. Financial institutions flush with cash have flocked to the Federal Reserve's reverse repurchase facility, loaning the US central bank money at 0% interest and raising concerns in the bond market that key short-term interest rates could actually fall below zero. So think about you keeping the money in the bank. You have, small interest, not a big one, a tiny little percent. Okay, you think, okay, at least I get some plus, but it's already worse than the inflation. And then they telling you, you know what, your money actually getting less. And this is the point when people say, you know what, I don't want to keep it in the bank. It's pointless. The value of my money is going down. And then plus they're going to take money from me to keep it in the bank. So what's the point to do so? And this is when actually more people would like to enter in kind of safe haven zones, which could be precious metals. Gold can go up, and they might visit the stock market, but we will see how the stock market behaves at that point, because, you know, we also pumping their bubble, kind of. And we can have cryptocurrency, such like Bitcoin, because they say, okay, maybe Bitcoin, even now, and you compare it to December when it was like, you know, 20,000 US dollar. Now it even went up in this year to 65, and then now it's down to 30, mid 30s. And yes, it might go a bit more down, but when we're looking at long term, it's making very, very nice gains. So this is just for a short period of time. And this can actually make people to invest in other things, taking out their money. And when you think about it, you know, we have about $17 trillion in US bank account, just staying in cash. Think about it when people decide, okay, you know what, I'm taking this out. Of course, not all of them, not all of this money, but like a part of it. And this will inflow into investment areas, just like cryptocurrencies, for instance, and Bitcoin. So this is, I think, a very, very interesting issue, which actually it's in favor for Bitcoin. But yeah, things in general, like economy-wise, they don't look too good. Okay, let's move on to the next news. And the next thing is going to be about the Bitcoin dominance cycle suggests that 2017 crypto rally could repeat. So what about this? So back in 2017, we had a very, very similar pattern when it comes to you know, Bitcoin dominance cycle. And you can see it here in this article. So the title is Bitcoin dominance cycle suggests the 2017 crypto rally could repeat. And for the purpose of the historical comparison, it's also worth noting that the pattern of the dominance chart currently looks much like it did during early part of 2017, which we can witnessing here. So look, here you can see the dominance dropping down all the way here to 40%, recovering, going up here, and then when we reached it in December, you know, the Bitcoin top, then it fell down. And this is where we are right now. So this one and this one, they look pretty much the same. So as the market have gone into the meltdown since 12th of May, Bitcoin dominance had been falling pretty steadily from around 70% in January to low of under 40 by the time the crash was underway. At that point, Bitcoin dominance was at its lowest since summer 2018. It has since recovered to above 43. So if the same pattern is underway this time around, then the market is likely to be at equivalent of summer 2017, when the altcoin season was just ramping up and still some months away from Bitcoin's price peak of around 20,000 in December 2017. So what's happening right now, it still can make a great year for this year. Yes, are we kind of in a shaky zone? Yes, we are. No question of that. But it's very important to highlight both possibilities. And yes, you can speak about the bearish part because, yeah, partly it's definitely true. But the other part, we can see some bullishness as well. And when you're just looking back, the pattern, how it looked like back in 2017, that kind of summer with this Bitcoin dominance can repeat itself. And it's not necessarily going to happen. Maybe we're going more down. It's not happening like this, but it can also go in this way. And this is the only thing what we can do. Checking out always both sides of the coin and making the decision, our own decision, keep learning and learning from the history, and keep an eye on the present, looking into the future, so to make the best out of it. So this is, I think, also a very interesting thing. Okay, let's move on to the next one. This is all about Cardano, because Cardano right now looking bullish. We have seen pretty bad moves recently, but Cardano holding itself quite well. And yes, there are some reasons for it. So Cardano leads the tepid crypto market recovery ahead of Memorial Day. The combined value of all cryptocurrencies rose 4.4% on Sunday to 1.6 trillion, according to data from CoinGecko. Among the majors, it was Cardano's ADA leading the rally with 17% gain. ADA peaked at $1.7 according to TradingView. At current values, Cardano was the fourth largest cryptocurrency, and still is when I'm recording this video, with a total market capitalization of $52.9 billion. And look, early adopters will have the opportunity. So this is the bullish news, what's happening. So Alonso Smart contract testnet, it's about here. Early adopters will have the opportunity to test Alonso Blue, the first alpha testnet, over the next month, so pretty soon. The Alonso hard fork will bring exciting and highly anticipated new capabilities to Cardano through the integration of Bluetooth scripts onto the blockchain. These will allow for the implementation of smart contracts in Cardano, enabling the deployment of a wide range of new DeFi applications for the first time. And this is very, very important, because people waiting for Cardano for a long time, and this thing can add to its development a lot, and it's kind of happening, as you can see, in the next couple of months, so during the summer period, which can bring all eyes on Cardano and for the Cardano ecosystem, as we have experienced some hypes around Polkadot, when things were around Polkadot, and Cardano was a bit more silent. So this year, many big things can happen. Cardano, Polkadot. We can have an ETF, Bitcoin ETF in the US. So many other things. Ethereum layer 2 opportunities, just like Polygon, Optimism, and so on and so forth. So there are big changes in this blockchain crypto industry in 2021, and even the market looks like as it is right now, you don't know when it will actually recover and come back, because positive things are happening in this crypto space. So I think Cardano looking good. It can be one of the great performers during the summer, but of course we will see how the market plays out. But now Cardano was holding itself pretty well and became the fourth biggest cryptocurrency right now. Okay, guys, that's it for today. Tomorrow, don't forget, I'm coming back with the freshest cryptocurrency and blockchain news. If you like this kind of content, smash the like button. And also, if you want to get these daily cryptocurrency and blockchain news, then subscribe to this YouTube channel, Blockchain Bloom, and subscribe bell button. Oh, that's it you have to do. And then you're getting these videos, the notifications about them, so you know when a new video is out. Thanks a lot for watching. See you tomorrow. Have a good one. Bye-bye.